So the trend is your friend, right? Bull markets, bear markets, whatever sentiment you're in terms of the camp, they will humble you if you catch the move too late. Impatient bulls will always get wrecked. Today I'm going to explain why capital preservation is key, but also why I'm looking to sell some of my spot holdings if we get to certain points. So on the screen, we need to talk about traditional markets just a little bit, right? The reason being is because we've got earnings season and we've also got FOMC meetings coming up next week. So you can see that the 26th, 27th of July, but there's a gap. There's a big gap there. There's no August, right? There's a problem where we've got to think, are we going to anticipate something more aggressive? Is that going to affect the market, or is it going to just make us rally more? Ideally, we don't know. But right now, the media has been gearing up for a 100-point basis. If you look at the news articles, they've been mentioned in the media, kind of getting people ready. I don't think that's possible, but we never know, right? So then we've got September to deal with, and then November and into December. Personally, I think it's not the time to kind of deploy a lot of capital. I think it's a good time to deploy some capital if you are following the correct trend, which we will explain in this video. So what's been happening other than that? Obviously, Tesla have sold some of their holdings. It doesn't really affect the market much because it happened in Q1 into Q2 sort of situation, so quite a while ago now. But they have to declare that in their earnings, right? When you think about it, yeah, $1.5 billion holdings is now significantly shrunk, okay? They have made a small loss on that, but they are still actually holding the main core principle of that 25%. Whether they hold it for the long term, who knows? Whether they buy back lower, who knows? We just don't know. We are speculating. So let's talk about the bullish nature of the market, right? I believe a lot of people are getting very, very bullish, and it's going to create that extra emotion that you are missing at the bottom, so to speak. But reality is, too many people are obsessed with the bottoms. In my opinion, if people were that obsessed with bottoms, they should have been obsessed with the tops as well. But the reality is people weren't. People weren't taking profit, but now they're getting very obsessed with the bottoms. The reality is a lot of people will be in this market. They will buy low and they will not take profit, like I'm going to explain in this video what I'm going to be doing, certainly when you look at my holdings, right? In reality though, a lot of YouTubers are going to get you caught out. They are going to get that emotional trigger. The reality is emotion's the biggest killer in the market, so is greed, so is fear. They're all emotions, funny enough. So just be careful. We can see the thumbnails, we're seeing a lot of people talking about certain situations, history repeating, and that does have a theme. We always get bear market rallies. We always get uptrends in lower time frames, which will catch you out. So let's explain, right? The market looks interesting. This is the move since literally April time, all the way down to this bottom level, the local bottom as we so to speak. Now, for the first time in a long time, we've actually had the EMA 8 cross below the EMA 21 on the daily time frame. There's been nothing for you to buy until basically we've broken out this level of structure here, basically roughly around $21,000. That is the thing. We've only just broken out of that structure for the first time in a lot of time. We're talking 3 months here. Everyone's getting very, very excited, which is fair enough. We're actually having a movement. But the reality is, we've got a lot of stuff up here. If we do go up there into that region, doesn't mean it's a bull market. It just means that we are rallying against the trend. The overall trend is still a bear market trend. Why? Go to the weekly time frame. This is what it looks like. Okay? Everyone's getting excited. I know. It's mental. We've had these consecutive red candles. The history of those weeks that went way beyond the previous kind of situation of history, and now we're here. Everyone's talking that this is the run to the next upside. Personally, I think the probability of that is relatively low. So how do you play it? Follow the trend, right? If you are not taking anything off the table, certainly if you've been buying down here, you should be, right? That's kind of how the trend is your friend. Opportunity. Why I'm selling? Why? Because it's obvious. We are still in a bear market. If you've got some crypto here and you've not taken anything off the table, and even though this is obviously BTC, if that is a 52% move, it's going to move the altcoins massively. So let's talk about the altcoins, right? Ethereum. As you can see here, right? Very, very simple. What happened? Well, we've moved up significantly, and I believe personally $2,000 level is going to be a pretty nice area for maybe to unload a few of your bags. In retrospect, don't be an idiot. That doesn't mean be all in, all out. This is just common sense. So put it this way, not financial advice. Just do whatever is right for your portfolio. Too many people ask the question, what should I do? If you're asking that question, you shouldn't be here. If you're asking someone who you don't even know what to do, you should not be investing at all. So treat it as whatever advice you want, really. It's entertainment purposes. But if you've got 20% of your bag and you were thinking, you know what, I should probably sell a little bit of that. Why? Because we're in a bear market trend. Why? Because the overall higher time frames are telling us that we are probably going to go down more than up. That's just symmetric. This is why you buy support. This is why you offload a resistance. It's all about capital preservation. Simple as that, if you want to call it that way. So whether that is financial advice or not, I don't know. It's just common sense in my opinion. But it's educational. It's teaching. So yeah, don't be an idiot, basically. Anyways, moving on to the other stuff. Total market cap. Again, from this April time, we've melted. We've run up to roughly the $1 trillion mark, right? I think we probably will most likely try and retest this region, and that is probably a good region to be. Certainly if you have not, as I say, not taken anything off the table, especially if you've been buying the lows, you probably should be. But that being said though, we've finally crossed over on the EMA. We're starting to show a sign of life, trend, strength. The EMA 8 is starting to hug the line a little bit. That's a good sign, right? But as I say, we still have this to worry about. This could end tomorrow. This could end Sunday, Monday, Tuesday, whatever day. Stack of cards. We just don't know how far this bear market rally will go on for. And that is where it is at the moment. And we've got to treat it as that. Why? Because we just don't know where it's going to stop. The dominance of the USD in terms of, you know, stable currencies may well go down to this point here. We may well turn around. If that is the case, people may well be deploying their money back into stables. And guess what? They've taken their profit and you are holding the bag, which is not what you want to see. Finally, the last point before I go and leave you to it. The dominance and the strength of the dollar index is still relatively high right now. We are still holding this moving average at the moment. I wouldn't do much TA on this because it is so many different variables, but ultimately we've got to look at that. The S&P 500 has been breaking up. A bit of a bear market rally, as you would say. It has to bounce. It's dropped a significant chunk. The reality is, we do not know what's going to happen on the FOMC day, which is happening early next week. So just be careful, right? Take profit as and when you can. In a bear market, you want to be doing that. Trust me, capital preservation is awesome. If you are buying and being naive enough to think that this is not just going to stop and turn around at some point, you should be thinking about that, because reality is, if we go to 28k, there's a lot more fuel for the fire. And that fuel for the fire can be used to break this low for the first time properly into a much bigger downside move. So just be careful. Anyways, there we go. I'm going to stop talking now. If you like my stuff, leave it a like, follow, subscribe, all kinds of good stuff, and I'll see you on Monday.